Welcome, everyone. Today, we're cracking open a book that was literally born from the ashes of the greatest financial crash in history. It's a book that created legends like Warren Buffett, and it's called Security Analysis, the timeless guide to value investing.
And this quote right here, it gets to the absolute heart of the matter. It tells us that in the short run, the stock market can be, well, kind of crazy. It can be just plain wrong. A company's stock price can get completely unhinged from what the business is actually worth. And that gap, that's where fortunes are either made or completely lost. And it's that exact problem that security analysis was written to solve. So, welcome to Book Talk Finance. This is where we unpack the foundational, the most important texts of the financial world, the ones that truly changed the game. That's right. Today we are unlocking the secrets of security analysis, written by the absolute godfathers of value investing, Benjamin Graham and David Dodd. Now, I want you to think of this not just as a book, but as a complete operating system for your financial brain. It's a rational framework designed to protect you from chaos and guide you toward truly sound decisions. So, how are you going to tackle this beast of a book? Well, we've broken it down into 5 core ideas. First, we'll journey back to Wall Street's Wild West to see where this all came from. Then we'll draw a critical line in the sand. Are you an investor or a speculator? After that, we'll dive into the most important concept, the margin of safety. We'll then understand the analyst's true work. And finally, we'll see why this is truly a philosophy for a lifetime. Sound good? Let's dive in. All right, first up, to really truly appreciate the genius of this book, you have to understand the utter chaos it was born from. We're not just talking about a market downturn here. This was a full-blown financial apocalypse. I mean, just look at this timeline. It is brutal. After the '29 crash, the market didn't just dip, it completely evaporated. The Dow Jones Industrial Average lost 87% of its value. Let that sink in. By 1933, 1 in 4 people was unemployed. It was into this economic wasteland, this total wreckage, that Graham and Dodd published Security Analysis in 1934. It was like a single rational lighthouse shining in the middle of a hurricane. So what on earth caused all this? Well, the 1920s were one giant speculative party. The market was treated like a casino, not a collection of real businesses. People were chasing tips, rumors, and momentum instead of looking at actual balance sheets. As the book says, hope and prophecy had replaced real analysis. And that, my friends, is always a recipe for disaster. And this quote, wow, it just perfectly captures the dangerous, seductive mindset of that era. Why bother with the hard work of building a career when you can just get rich quick in the market? This kind of thinking, this siren song, led millions of people straight to financial ruin. And it's against this crazy backdrop that Graham and Dodd introduced the revolutionary idea. So, to bring some sanity back to the world, Graham and Dodd started with a simple but profound distinction. They drew a very clear line in the sand, separating 2 very, very different activities, investing and speculating. This right here is Graham's precise definition, and trust me, every single word counts. An investment requires 3 things. 1, thorough analysis. That means you do the homework. 2, safety of principle. You absolutely cannot afford to lose your starting capital. And 3, an adequate return. Not a spectacular, lottery-winning return, but a satisfactory, adequate one. If you miss any one of those 3 pillars, Graham says you're not investing. You're speculating. Period. End of story. And this slide just lays it all out, right? It's about 2 totally different mindsets. The investor is focused on the real value of the business for the long haul. The speculator, on the other hand, is just gambling on which way the price ticker will wiggle tomorrow. One person analyzes and aims to control risk. The other one relies on hope and prophecy. So the real question you have to ask yourself is, which one are you? Okay, so you've decided you want to be an investor. Fantastic. But how do you actually protect yourself from all the unknowns out there? The answer lies in what Graham famously called the 3 most important words in investing: margin of safety. This is the central concept, the absolute core of the whole philosophy. Now, before we can even talk about a margin of safety, you need an anchor point, and that anchor is what we call intrinsic value. This is the real underlying worth of a business. It's based on things like its assets, its earnings power, its future prospects. It has absolutely nothing to do with the stock price that's flashing on your screen. You know the saying, price is what you pay, value is what you get. Intrinsic value is the what you get part. But you might be thinking, how can I possibly know a company's exact intrinsic value? Well, Graham had this brilliant answer. You don't have to. He said you don't need to know a woman's exact birth date to know that she's old enough to vote. In the same way, you don't need to calculate a business's value down to the last penny to know if its stock is just ridiculously, obviously cheap.
So, the margin of safety is simply that gap between the intrinsic value and the price you pay. It's the discount. If you do your homework and figure a business is worth about $100 a share, you don't buy it at 95. You wait until you can buy it for, say, 50 or 60 bucks. That massive discount, that's your margin of safety. It's your buffer against being wrong, against unforeseen problems, against just plain old bad luck. And here's probably the best way to make this concept really stick. Think about a bridge. If a bridge has a sign that says its maximum capacity is exactly 10,000 pounds, would you feel comfortable driving a 10,000-pound truck over it? No way. You want a bridge that's rated for 15,000 pounds. That extra 5,000 pounds of capacity, that's your margin of safety. It's what lets you cross with confidence, knowing that even if something goes a little wrong, you're still safe. Buying stocks should be no different. So we have the principles, right? We know what to do. But here's the thing. Knowing them and actually doing them are two completely different things. And this brings us to the human element. Graham was crystal clear that this method requires a very specific temperament, a certain kind of mindset. And here are the essential traits. Notice something? Genius-level IQ is not on the list. This isn't about being the smartest person in the room. It's about character. It takes incredible patience to wait for a true bargain when everyone else is caught up in FOMO. It takes unwavering intellectual honesty to admit when you've made a mistake. And maybe most importantly, it takes the courage to stand apart from the crowd, to buy when they're panicking and to be skeptical when they're euphoric. It's about remembering you are buying a piece of a business, not just a flickering ticker symbol. Now, I know what you might be thinking. This book was written way back in 1934. Is it really still relevant today? And the answer is a resounding, absolute yes. In fact, you could argue these principles are more important now than they have ever been. Just think about our modern world for a second. We are literally drowning in financial noise. We've got cable channels shouting at us 24/7, algorithms trading in microseconds, and this immense, crushing pressure to show good results this quarter, this month, this week. In this kind of environment, Graham and Dodd's philosophy isn't just a strategy. It's a mental fortress. It's the ultimate defense that protects you from all that madness and lets you focus on what actually matters, value. And this really is the ultimate promise of value investing. It's not a get-rich-quick scheme, far from it. It's a get-rich-slowly plan. And maybe even more important, it's a stay-rich plan. It is a disciplined, sensible path to building real, lasting wealth by focusing first and foremost on not losing money. So, after all this, it really just comes down to one powerful, profound question. Every second of every day, the market will scream the price of everything at you. But the hard part, the part that truly matters, is this. Do you know the value? Answering that question for yourself, that's the essential challenge that security analysis leaves us with. And learning how to do it can change your entire financial life. Thank you so much for joining us on this book talk. If you want to keep unpacking these monumental books that have truly shaped our world, make sure you subscribe. We have so many more to explore together. We'll see you next time.